Hey everybody, this is Aaron Morgan here with the Aerosol team of Keller Williams, and I have a special guest today, Bri Vandlen with Honor Home Loans. And we have a few questions that were given to us, and we're just going to run through them, and she'll answer some of those on the mortgage lending side, okay? So sit back, relax, and hopefully this helps you out on your home buying journey. So, Bri, here's my first question to you. Do you think this is a good time to purchase a home?
Sure. So it depends on the buyer, right? So we see people walk through your doors all the time that they will go through and tell us their situation. So everybody's different. So I answer that in a general sense as if it's a good time for you to buy, then yes, but it may not be for everybody. For example, if you are only qualified for an FHA loan and you need a down payment, but you don't have a means for a down payment, then you may not qualify to buy right now. So it may not be a good time for you versus, hey, you qualify, you have your down payment saved, you're comfortable with the payment, and then you're just maybe questioning interest rates or the price of the home.
Correct.
That could still be a good time to buy for you.
Okay, and that makes a whole lot of sense. We do have a lot of challenged buyers right now.
Yeah.
So I think that's a good starting point with our questions.
Oh, absolutely.
Now, how do you feel about using a local lender? I know you're a local lender, but do you think that's a good idea for some of the home buyers we see today?
Absolutely. So when you are looking at offers as a listing agent, because obviously you guys are going to list your home with Aaron,
right.
When you go through that process, you as an educated listing agent are going to look at the people in front of you, not just as a buyer, but also who you're working with.
Right.
So the team that you're building with the buyer's agent and also your lender, you're going to say, hey, this person is stronger because I can get them on the phone. Or because they respond to me on a Saturday when I need them, which most local lenders do, or at least are knowledgeable on the area, and you can walk into their office should you need to.
Right, okay. That's a good plus. That's a great plus, actually. From what I heard from the other larger banks, I'm not going to name any names, but it's very difficult on the weekends to get in touch with them. You usually have to go through another party first before you talk to the actual lender. So, okay. Great,
and we don't have any 800 numbers.
Okay,
so there you go.
Right. That makes sense. So if I walk into your office and I say, hey, I want to apply for a mortgage, how do I determine the best mortgage for me? What do you do? What type of circumstances do you put me through, or questions do you ask?
Yeah, absolutely. So the great part about when you're ready to apply is all you have to do is let me know. So just like right now, when you have buyers ready, they will contact me, or you let me know, you call me on the phone and say, hey, Bri, this person is ready. Okay, that's great. All I need to know is how they want to apply. So in person, over the phone, or online. Doesn't matter to me, just whatever's most comfortable for them. Just like, we've contacted some people with us in the office. So that's the biggest thing for them. Everything else is answering the questions that I have true and correct to the best of their ability. So for example, like if you pay alimony, then I need to know you paid alimony, not, oh, we don't want her to know, but I'll always find out. So little things like that. And those questions can be your income, your assets, some debts that you have that may or may not show up on your credit report. But pretty easy to answer on the fly.
Okay. Yeah. Good. So can you tell me the difference between FHA mortgage and a conventional loan mortgage?
Sure.
And VA is self-explanatory, but for those that don't know, if you can explain that one.
Yeah, absolutely. So FHA is a little bit more loose on qualifications. So right now, our minimum with FHA is 580. So it gives a little more wiggle room versus with conventional at 620. So automatically, if you have a 600, I know your only option is FHA if you haven't served in the military.
Okay, and FHA is government funded.
That is correct. Yep, just like VA. So those are some of your differences, whereas FHA also has the mortgage insurance that's there for the life of your loan, but also a good low down payment option with the 3.5%. So conventional is more of your higher requirements in some cases. So conventional is going to honor your mortgage insurance based off of your credit score, versus FHA is just going to say, hey, everybody with FHA that puts 3.5% down gets X on mortgage insurance.
Okay.
So conventional says, hey, because you've paid your bills and I haven't, you're going to get a better rate on mortgage insurance than I will. So it's different for everybody. Same thing when you apply. That's one of the things that we'll run for you and say, hey, these are your options, but this one is best for you and here's why.
Okay.
So, and then conventional also has some differences on down payment. So first time home buyers or different income brackets, they'll honor 3% down.
Okay.
And then if you don't fit into that, they'll have you do 5% down.
Okay.
So depending on the situation, we would kind of run that. So if somebody's conscious of down payment, maybe qualifies for conventional, but says, hey, I don't want to do 5%. FHA may still be a better option for you because you're trying to preserve your cash.
Okay.
Yeah.
So I've heard 15%, 20% for conventional.
Miss. All miss.
So it's 5%.
So it depends, right? So
Okay.
everything has different uses. So for investment properties, you are looking at those higher price points. So
Gotcha.
single family homes on investments are the 15%.
Okay.
For primary purchases, yes, then you are looking at that 3 to 5%. But you could put as much down as you want, right? If you have 50%, you can throw it out if you're comfortable with that. But it's just not required.
Okay.
And so that's something too with like some of my first time home buyers that have the money. They say, hey, I want to do 20% down. Well, okay, you can do that, but let's look at the numbers. You know, is it better for you to pay $30 a month on mortgage insurance or pay $50,000 up front to avoid that?
Okay.
So that's one of the comparisons too that we would run for your buyers to say, hey, is this comfortable for you, or what is more important for you, to preserve cash or to save the $30 a month type of thing?
That makes a lot of sense. It really does. So I have a few buyers that want to invest. They're most likely going to have to go the conventional route, right? Do you think that it's a good time to do that as a buyer, or it doesn't matter? I mean, is it just like going to buy a primary resident home, or do you see any challenges with that right now as far as investing?
Sure. So the biggest thing with investing is the same question that we would revert back to for a primary residence of, is it a good time for you? Okay. So for somebody, for example, that is looking for long-term real estate, I never think it's a bad idea. Because then you can decide to refinance at any point, or you could decide to sell at any point because you aren't on a time limit. Versus maybe something that's a little bit different is somebody that's wanting to flip in 60 to 90 days. And that's short-sighted. We don't know if you can make your money back. Or let's say the market flips and it's no longer a seller's market. And then you lose that, or prices go down, or if rates go up. You know, there's all these ifs, ands, and buts that's a little bit harder of a question, whereas most of my investors are long-term investors that can say, hey, the rate doesn't matter to me because I know I qualify. Here's my goal, and as long as you're hitting those goals, then you're good to go.
Okay.
Yeah.
So basically, they have to come in and see you to get those.
Always, right?
Okay. Now, I know the answer to this question, and I stress this in my buyer's consultations all the time. And it's the first thing that I say. It's one of my my rules to real estate. All right?
Always.
But I'll ask the question anyway. Should a buyer get pre-approved before shopping for a home, and why?
Always get pre-approved first. Like Aaron said, he knows this, he preaches this. I do the same thing. That's why we love partnering with Aaron, because he's always going to direct you correctly on that. So he wants to make sure that you're in the best position possible. He's going to make sure that he knows your price range, what you qualify for, and also what you're comfortable with spending. So for example, if I'm Aaron's client and I'm pre-qualified for $3 million, I may be able to afford that on paper, but maybe I don't like that payment, right? I don't even know what the payment is. We don't want to know. That would scare me. So Aaron's going to say, hey, Bri, what are you comfortable with spending? Because I know your max is X, but maybe you only want to spend around Y. So then you can say, hey, he's paying attention for you to say, hey, based off your wants and needs and your comfortable monthly payment, this is where you need to spend or what you need to look at. So that way that's broken down. If you don't have that, let's say you have somebody that is looking at $1 million homes, but they can only afford or are pre-approved for $500,000.
Mm-hmm.
Well, then everything that they had set up as far as expectations is now cut in half.
Yeah. Okay. That makes a lot of sense. I mean, that's my number one rule.
Always.
It's like the 10 Commandments. That's number one in the 10 Commandments.
Yes.
Get pre-approved.
Mine too.
Yeah. All right, so I have one more question, and this is a great question. And I get this a lot, and there are some myths with this last question as well. Are there down payment assisted programs available? And tell me about some of the good ones and give me some myths that you hear.
Yeah, sure. So there are down payment assistance programs available. They're different per state. So in Tennessee, we have what's called THDA. So they will provide assistance depending on their qualification. So credit score of 640 and above, and then also income. So depending on how many people you have in your home and how much money you make, they will say you can or cannot use our program because you make too much or not enough type of thing. So that's one of the important things, in that we will always look at day one. So when you call, and of course you guys are going to get pre-approved first.
Yeah.
So when Aaron says, hey, they're ready to get pre-approved, then we'll say, hey, we need all income docs. We need you to answer X, Y, and Z questions. So that way we can make sure that THDA is a good fit for you on day one. So that is one of the programs, but same thing. So it depends on everybody.
Okay.
So although THDA is available, it may not be available for everybody. So let's say they have a 630 credit score. THDA is going to say, hey, unfortunately, you are outside of our credit score requirements. So maybe you can't use that program. And then maybe in another instance, maybe you have a down payment saved up. Maybe you have closing cost money that you can use. To whereas you may not need THDA, but you think you do because you hear the media of, oh, you have to have 20% down.
That's it.
On a primary, right?
Right.
So depending on those things and how you would answer these questions in our initial consultation, we can say, hey, here's the great news. Like, you don't need that. Like, you've done a great job saving, or you have other outlets of a 401k or gifted funds, or maybe they have another route to where they can bypass that and then be in a better position as well.
That makes a lot of sense.
Yeah.
Now, how long does the THDA program take? How long does that whole process take?
Sure. So that's a hard question because it's driven by THDA.
Gotcha.
So right now I think their turn times are like 3 days, and I haven't looked at that today, so don't quote me on that, but it does take longer. So reason being is we would fully underwrite the file, so you guys would turn in all of your documents, get us everything that we need. Once my underwriter says, hey, you're golden, you're good to go, we are a hard stop until THDA signs off on it and says, hey, now you're good to go type of thing. So when they come back, they can come back and say, hey, we need another pay stub, or hey, we need an updated bank statement. So whatever they ask for, even though we've satisfied and we think we're good, whatever they ask for, we have to go get re-underwrite it and then go back to THDA. So that's why, like on those, I would ask for 45 days to be safe. Always
write an offer.
Yes. Always close as soon as possible. But in that case, if THDA is going to say, hey, we need this, I would always rather have the extra time and set that realistic expectation versus on like an FHA file that I know my underwriter will work with me on. Then I would say, hey, 30 days. That's one thing too, that hey, you're trying to position yourself to be the best offer and the strongest offer, maybe close quickly, that may not be your best option.
Wow. I know that was a lot, but I think we covered some bases and killed some myths that we hear. And I hope this was rewarding for you guys, all the home buyers out there. If you have any questions, of course, you can definitely reach out to me, Aaron Morton, here at the Aerosol team of Keller Williams. And please give them their information so they can reach out to you as well.
Yeah, absolutely. Thanks again, guys. Bri Vandlen on our home loans, and Aaron has all my information, so you can contact him. He'll send it to you, and we're here to help with anything you guys need.
That's right. Awesome. So until next time, guys, happy home hunting, and I will talk to you soon. Have a good one.